All right. If you're just joining us now, we appreciate you being here. We have a good conversation planned. Look forward to talking with you. So just hang tight. Excited to be here with you guys tonight. Thanks for joining us. I know it's getting close to the holidays, but this is a big conversation a lot of people have been wanting to have. And I'm a big believer in making sure you're having the right conversation with the right person. And as much as I stay in the know about property insurance and insuring my investment properties. Uh, I'll tell you, it's Chris who really educates me on what I'm talking about. So this is getting to be the, the best person to talk to on this. So we'll start about 3 more minutes, guys. So just take your time. People are getting off work. People are finishing dinner. And one thing I want to encourage you of, there are no bad questions. We're going to chat, we're going to be done by about 40 after. And, the first 25 minutes, we're just going to give you some dialogue of just a little bit real quick recap who we are, what we do. And then Chris Salameh and I have worked together for several years. He insures 95% of my personal portfolio. Hundreds and hundreds of our investors have used him. And he is one of the reasons why I'd say combined with our in-house financing, why we have such a successful track record with investors, because when you get them insured right and financed right and build them the right houses, it's key. So Chris is a huge part of our team, and there's always been a lot of questions about what's happening with Florida insurance. And there are more rumors swirling right now around Florida insurance than anything, almost any other subject, especially in real estate investing. So we'll go over that tonight. Again, I see people are still joining. Appreciate your patience. Another 2 minutes, we're going to get started again. Everyone's getting that last bit of work done or last bite of dinner. And again, we appreciate you being here. So another 2 minutes, we'll get started. And again, we'll have you off in a decent amount of time so you can get back to your family. And we appreciate you spending a few moments with us tonight. Okay, 1 more minute, guys. We'll get started. If you're just joining, you know, happy to have you here. And it's going to be a great conversation around the important aspect of investing, which is property insurance. Also, a couple of things happening in Florida that you want to be aware of, which I didn't even find out until the last day or two from Chris. So I'm very excited. We'll talk about that tonight. Okay, got a decent crowd on here. Another 30 seconds, guys. Let everyone get their bearings, hop on. I can already see a good amount of people joined in. We're super happy to have you guys here tonight. All right. And so you guys know questions. We love answering questions. So like I said, we'll go for about 25 minutes or so, and then we're going to open up the floor to questions. There are no bad questions. If you have questions about just market fundamentals, real estate investing, insurance, and how does it really work, some of the more lucrative ways to get properly insured and up your cash flow, Chris is an expert. Again, this is who I go to for almost all of my insurance needs for my own personal portfolio. I know my building partner's the same way, and I'd say at least 90% of our clients. So we don't require people to work with Chris; they choose to, and I understand why, because I'm a personal client as well. All right, well, we're going to get started, guys. I appreciate you being here tonight. My name is Jim Shields. I'm a partner at Southern Impression Homes. And we focus on turnkey rentals, but new construction. We've all heard about turnkey rentals where you might not live in an area and you want someone to take care of everything, where you're getting it, you fix it up. and get it rented and maybe managed for you. Well, we did those for a number of years, fixing up bulk foreclosures. But about 10 years ago, we went to the new construction model. And that's all we do now is new construction. There's a number of reasons, one of them being insurance, which Crystal talked about tonight. And we build single family duplexes and quads for our investors in several different markets in Florida. In fact, we're in about 12 different markets in Florida, the Northeast, which includes Jacksonville and Palm Coast, Ocala, which also includes Citrus Springs and Inverness, and then now about 7 different markets in Southwest Florida. You'll notice we're not in Tampa, we're not in Miami, we're not in Orlando. It's not that we don't like those places. They're great places to visit. I have relatives in some of those areas. However, the cash flow numbers don't work, and plus the affordability is off. We like to go into markets where there's growth occurring, but the median values are much cheaper. So we think you're in a safer spot and better chance for appreciation. We work with some of the largest real estate influencers and podcasters, educators in the world, including the Jason Hartman Group, DLP Capital, Narada, Kathy Fecky of Real Wealth Network. The real estate guys have been with us for over a decade now, and White Coat Investors for a number of years as well. And a number of other people, including some of my friends in the EO group and Get Rich Education. We love working with the people that we work with because we feel like we've really developed a system. In 26 years of being in real estate investing, our goal is to find the right property to build for you. We get it financed for you and we get it managed for you. And that is how our system works and has become so successful. We are nearing almost $1 billion under asset management of properties that we've built and done that for our investor base. Those properties are producing about 56 million in annual recurring revenue for our investors. Just in the last few years, we've created almost 200 million in equity for these investors that are working with us. We currently work with over 1,000 active investors like yourself who are building their rental portfolios through us. We've built over 9,000 properties. We house over 10,000 residents. We have over 120 people on our team, and that's growing. And we also require an $80,000 minimum investment. It's important to tell you this. When I started out in real estate investing, there's no way I could have done this. So we're not for everyone, but for the people who are really entrenched in their career or their practice or their business, and they don't have outlets to do real estate themselves, but they really want to get some money working out of the market into their own real estate portfolio, their own rental properties. This is the minimum. Once you have that, we can start to build you a successful portfolio, as a lot of our case studies have shown. We are now sitting on over 5,000 lots in Florida that we plan to build out over the next few years that we're very excited about. We are seeing great things for Florida. There was a lot of things that were coming out post this last election of why Florida is going to continue to grow. And we're excited to see and be a part of that. And when I went into this 26 years ago, it was really because of this quote: 90% of all millionaires became so through owning real estate. That's why I did it. I wanted to be able to buy back my time and have the things that my family wasn't able to have because we didn't grow up with money. And real estate investing, being able to start buying property 25 years ago, has completely changed my life and put me in a position to do the things that I like to do with the people I really enjoy. And we want the same for you. Our last book that just came out with my wife and I was really my wife and I, but it was our entire team, my building partner, our property counselors, many of our clients, our team, to talk about the principles we've learned over the last 25 years in real estate investing, why new construction has absolutely revolutionized what we do over the last 10 years, and a lot of success stories. Now, this is a best-selling book, but tonight, Jaden is here. Jaden, you want to give a wave? Everyone see Jaden. She's great at helping, keeps me straight. So what Jaden will do is, if you guys are interested in a copy of the book, normally it sells for $22.95 on Amazon or at Barnes & Nobles. Just put in the comments and questions your name and address. We're going to mail you out a free copy of this book. So this is a great starting point to get to understand how we work, who we work with, and some of the success stories. Again, if you had invested with us 5 years ago, we always look at the 5-year plan. People say, well, what if I stay in the S&P 500? That's great. I'm invested in that as well. You would have earned about 10.5% on your money the last 5 years. A good real estate fund, a good REIT, those have done pretty well. They're at about 13.5%, right? Those REITs and real estate funds, they come to guys like all of us and ask us to invest with them so they can invest the money into owning real estate. And so I like that. So I understand the business. I invest in some of those. But where I've made my most money over the last 25 years, guys, and over the last 5 years is owning my own real estate, my own rental real estate. And if you had invested $250,000 into our rental properties here, new construction in Jacksonville, Florida, you would have averaged almost 70% on your money over the last 5 years annually. That's the power of owning real estate. And that's why I believe in it so strongly. And we try to help investors do what we've done in using the new construction model. Now, I'm really excited tonight to have my friend Chris Salameh here. Again, Chris has been such a part of my real estate team for several years now. And I can tell you 95% of my personal portfolio is insured by Chris and his company because that's how much we like him. Most of our people do. And there's a lot of things going on right now in Florida real estate that I was really, excited to have him on to help clear some of the air. Chris, thanks for coming on tonight. We really appreciate it.
Oh, absolutely, Jim. I appreciate you guys having me, and it looks like you got a pretty good crowd here. And I know there's been a ton of rumors in the marketplace, especially all around the country, and especially if there's and I'm sure you guys have a lot of investors that are not their home base isn't here in Florida. So
Yeah.
all we kind of have are the news articles and the TV kind of tell us what's going on in Florida. So I'm excited to be here so we can kind of maybe clear the air and be able to, educate a little bit and answer some questions. So I look forward to it and I appreciate it.
Great. No, thanks for being here. Well, yeah, let's start about that. I mean, I was up in Canada at one of our investor groups, and it was people in the cafe. So I wasn't actually with our investor base. It was before we went to this event, and nice people in the cafe. "Oh, what do you do? What are you doing here?" I said, "Oh, we do real estate, build houses in Florida." And they said, "Oh, I heard you can't get insurance on property in Florida anymore." Have you ever heard that when one of our clients first calls you?
That sounds about right. That
And why
sounds about
is that? Do you want to decipher there's a lot of different types of properties in Florida. And so, do you want to kind of talk about that rumor a little bit and also decipher the different types of properties maybe to give a little better clarity?
Certainly. Um, it's a good place to start. So I will start with a little bit of history on Florida, and I won't take up too much of your time with that part. But
No
so
problem.
let's go back 15 years, 15 maybe 18 years, probably close to whenever I was getting started. So we had contractors in Florida going door to door, and they were knocking on customers' door, and they were saying, "Hey, you have a crack in your driveway. We can fix that for you. If you show us your insurance policy, we can get it fixed for you for free, and we'll file it as a sinkhole claim." So once one of those got approved by an insurance company, now all the contractors ended up coming out of the woodworks, and now all of a sudden everybody has sinkhole claims, and it caused a huge issue in the insurance marketplace in
Wow.
Florida. We have attorneys here, obviously, and that it kind of exacerbates the scenario. So what ends up happening is the insurance companies say, "All right, if this is the case, we're going to have to find some language that really distinguishes what a sinkhole is." And we were able to fix that problem because it was spiraling out of control. And now let's fast forward to about 2017, 2018. And we ended up finding all of the contractors were now going door to door saying, "Hey, 2 years ago, there was a hailstorm. If you show us your insurance policy, we can get your roof, we'll probably get you a free roof."
Oh,
And
yeah.
what could have costed, if there was an indeed damage and it was legitimate, what could have costed $15,000 for a free roof from the insurance company? Once a contractor got a hold of it and they get the customer to sign what was called an AOB form, an assignment of benefits form, it gives them the rights to the insurance policy. Then they would turn around and say, "Hey, we have this customer's signature. They've hired us to replace this roof. It's going to cost us $40,000." When the insurance company knows that that's probably not legitimate, and they would take it to court, and they ended up losing every single time. And we had a
Oh, wow.
statute in Florida around attorney's fees where in that scenario when it happened, when the insurance company fought it in court and they spent 6 to 8 months in court and they would lose, not only did they have to pay for the $40,000 inflated roof, but they also had to pay the $300,000 for that roofing company's attorney's fees. You multiply that thousands and thousands of times. That's what happened in Florida. It was rampant with fraud and litigation.
Wow.
So Well, it's fast. So in May of 2023, Governor DeSantis signed a bill and he basically told everybody the party's over. There's not going to be the one-way attorney fee multiplier is not going to happen anymore. And the third party claim filing is not going to happen anymore. That was
Mhm.
a blessing for us. We knew it would take about 12 to 18 months. Um, but that is where the rumors came from. So the more that that was going on, the more of a struggle the insurance companies found themselves in to stay profitable. And that's why everybody saw all of their rates, everybody's rates were rising together. So I would have investors calling us or other customers calling us saying, "Hey, why did my rate go up? We didn't file any claims." And we would basically have to say, well, if you were to walk outside and maybe look to your left and to your right, one of your neighbors did. And we ended up in an extremely bad position. And that's pretty much all the news that came out of Florida. But since last May, and we've got that reform, everything's been on the upswing, and it's actually been great. And what's really good for you in your program, Jim, is new construction is the best. It is the absolute cheapest to insure. It's
Yeah.
the easiest to insure. The risk is very, very low. And all of the issues that everybody had heard about around getting insurance, it was more around the older properties, 15, 20, 25, and 30 years old, because that's when properties start to, maybe you'll see a pipe leak or the roof is kind of, it's getting to age and it needs to be replaced. And, many people don't have $20,000 sitting aside. So when that contractor came and knocked on a door, people took advantage, as you might expect, and that's what we experienced. But it does seem like we are back on the upswing, and I just can't stress enough how incredible it is that you guys are. Most of your investors are just doing new construction. They're getting the cheapest insurance cost. And I've been in the last 10 to 12 days, I've been visited by three insurance companies who have advised me that they're now dropping some rates. It's not significant. They're in the 5 to 8% range, but it's the first time in 4 years I got to have the conversation that, hey, we're going to have some rate decreases instead of increases. So we have investors that we insured maybe a couple of years ago that they're getting their renewals now and they're seeing some decreases. So it's nice.
No, and that's a huge, huge. I mean, any bit is of a decrease is a nice thing, especially when we've gone through hurricanes in certain parts. And there's also, like you said, back in the day, I used to do a lot of fixer-upper houses from the 1950s. I don't do those anymore. I don't offer them. That's not my sweet spot. We only do new construction. And, for example, you insure my personal residence, right? I'm at my home office right now. And I know, because I remember I sent you someone, our barrier island that I live on, I'm 4 seconds off the ocean. But you can go to a house that's a little beach cottage right down the street from me that is 1952 and a third of the size, and you have no choice but to quote them insurance policy about 5 times what you charge me for my home. And it's not because you like me better, it's because the insurance companies are about risk. And I know this was you that taught me that. I'm like, I don't understand this, but you were explaining that the elevation is so important, right? Because flooding is the biggest risk in it's not even wind, it's flooding. Most people don't know that about hurricanes. But if the elevation, like my house is at 14 feet, the ones down the road are at 2 feet. That's how they analyze. Is that correct? That has a lot to do with the older properties were built on a lower ground, correct?
Certainly, yeah, and I know FEMA's kind of coming back to the market and starting to put some new codes in and say, hey, if this is ever going to be covered by FEMA, here are the standards that it needs to be built with. So that's starting to help. But no, you're absolutely right. It's obviously always about risk. So especially in that particular scenario, the flood insurance is really coming into play, and
Yeah.
it's just kind of in the last couple of years we've been in the last few hurricanes that we've seen. And I don't know, and there could be some fear mongering going on, but whenever you turn on the TV when there's a hurricane approaching Florida, there's mayors and governors saying, hey, we are expecting 15, 20, 25-foot storm surges. And that's just completely unheard of. So what has also happened in the last few years is we would have a hurricane go through, and as you know, FEMA gets to set the flood zone for all the different areas, and you guys do a great job of mostly buying land that are not considered in flood zones, or also known as flood zone X, which is the lowest risk zone. Um, And that's appreciative because it makes it a whole lot easier. But for a very, very long time, we lived on the premise of, hey, this property is not in a flood zone or it's in a low risk zone. We
Yeah.
don't need flood insurance. And then 4 years ago, we had a couple hurricanes, and areas that were considered to not be in a flood zone ended up flooding. And
Mhm.
FEMA came back and said, hey, 30 to 40% of all the flood claims that came in, they came in from flood zone X or the lowest risk zones. So the government told us that they didn't need flood because it wasn't in a flood zone. And the investors were told that it wasn't in a flood zone, that they didn't need flood insurance, so they didn't buy flood insurance. And then when those properties flooded, they had no choice but to turn back to the agents, to the insurance industry, and say, "Hey, you didn't recommend that we get flood insurance," and they launched lawsuits, and we ended up losing in court. So now on all of our properties in all of Florida, surrounded by water on three sides, we have no choice but to recommend flood insurance on every single property. But the advantage with you guys is you guys all build new construction. So we have great insurance companies who came back and say, "Hey, here's the property insurance policy. Instead of going to buy a separate flood insurance policy, we will allow you in certain areas, not in every area of Florida, but we will allow you to add flood insurance to this policy for an extremely low cost."
Yes.
For example, I did one earlier today where we were able to add $200,000 of flood coverage onto an investor's policy, and it was $175 a year, which is the lowest flood insurance policy that you're going to find in Florida.
Yeah, and I think people are probably shocked right now when you go, whoa, 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 $175 a week, $175 a month. No, that's a year.
That's
And
annually, yes.
yeah, and again, well, it's not only the area, because do you remember I sent, or maybe you sent it to us. I remember one of the storms a few years ago where we saw water in the streets of one of our areas, and our house was high and dry. And it showed how much, because, we complain about this as builders. Oh, we got to bring in all this dirt. Once the storm hits and we see how high and dry we are, it's an absolute game changer to how it can handle the storm. And that again, that's one of the reasons, Chris, why we don't do the older homes anymore. First of all, we couldn't get them as long of warranties. We couldn't get in as good areas we wanted to be in. And you could see insurance right now, I believe that insurance, along with interest rates, are the make and break of whether you're cash flowing or negative cash flowing. And
Certainly.
uh, and so we stick with that. What are you seeing too? And one thing I want to hit on too, Chris, is like you talked about storm surge and risk zones. A lot of the things that we hear about risk really is in that initial mile on the coast in, right? Um, and then the insurance starts to back down, right? So again, I take a risk of lifestyle and you insure me on it, but I'm going to pay more because I live right at the ocean, right? But most of our investment properties are a couple miles inland. How does the insurance company look at that differently? Does their risk assessment go in and go, hey, me personally, my personal residence, I'm taking a risk, but our investment properties, is that one of the reasons because they're in coastal areas, but normally inland? Does that help with the insurance rates?
Yeah, so they do the best job they can with trying to model certain areas, and not everything is the same. And I guess a good example is your house could be near the ocean or could be on the ocean,
Hmm.
on the east coast of Florida, and your insurance could be one cost. But if we picked up your same house and put it on the ocean, maybe in Southwest Florida, or in the panhandle. That could be something totally different. And the reason I wanted to bring that up is, like, let's say the Southwest area. 2 years ago, you guys were building properties in Southwest, and since several hurricanes had just come through that exact same area, even though none of the construction changed, but just because there were two events in that specific area, we struggled to get flood insurance. Had no bearing, nothing changed with the homes you guys were building, just that here were the events that recently happened. What essentially happens is insurance companies get scared. And I'm not sure how many of your investors are, too familiar with the insurance marketplace, but in Florida, and this is pretty much the standard all around the country, but insurance companies, they go out and they buy insurance. It's called reinsurance.
Hmm.
So just like you and I have a deductible on our homeowner's policy, maybe it's $2,500 or maybe it's 2% for a hurricane. Whenever our insurance companies in Florida, whenever a hurricane comes through, they have to buy reinsurance. So, but their deductible might be 10 million or 20 million. So they're
Okay.
on the hook for that first 10 million or first 20 million, and the reinsurance company is the one that steps in. That being said, is whenever several events happen in a small area in Florida, that can affect the insurability there when nothing else could be at play. It could have nothing to do with the elevation or the building construction. But since we didn't have that for a couple of years, now we're able to get flood insurance again. So we always appreciate when you guys build up the homes because it helps out on the rates. But Florida can sometimes be tedious, and
Hmm.
it gets extremely easy. And then there's sometimes when we get several events, and a certain very specific area will get a little bit more difficult.
Gotcha. And Chris, you and I were talking either today or yesterday. If in like insurance companies get scared, then obviously you want to make sure there's money coming into the market. And you said you've had some very pleasant surprises just of recent of new investor money. You want to talk a little bit about that of money coming to the market's always a good thing and new investors wanting to come into the insurance. I know you've been having some pretty positive meetings on that.
Definitely. So, two things on that, and it's a really good sign whenever we start to get new companies to the marketplace. And I know most were aware in the last 4 or 5 years, we've had 8 companies go belly up, and we've had another maybe 2 or 3 national companies just decide, hey, we don't want to do business in Florida anymore. This is just too tedious. And a lot of that has to do with not only the hurricanes, but it was all that fraud and litigation that was taking place. But now it seems that things have settled down. The bill that DeSantis passed really helped us out. So now we have brand new companies coming to the marketplace, ready to take on market share and assume some of those policies from Citizens. Citizens is the state mandated insurance company where
Yep.
we have to go if there's not a policy. None of you or your investors have to worry about that since it's all new construction. So we get to stay away from that because Citizens is um, candidly a nightmare to work with. And it's kind of made by design, so to try to push business out to the private market. But it's a
Yeah,
really, really good sign when new companies come to market and other companies come to visit and go, hey, our surplus is looking good, our claims underwriting is looking good. We're going to go ahead and start dropping rates, and we're going to be a little bit more open to exceptions if need be, because sometimes there are those circumstances where a claim happens or 2 claims happen in 24 months, and someone may find them. So, and claims follow you, especially here in Florida. I'm licensed in Florida and Georgia. I'm not sure how it works, outside of that. I'm not overly educated on the market outside of that. But in Florida and Georgia, let's say you have 2 claims in 2 years, we may have to go to an underwriter and go, hey, here's the 2 claims, here's what happened. We can prove that there's no negligence, but it requires a one-on-one conversation, and it requires a good relationship, which we end up having due to the volume of business that you guys do. We end up with a good relationship with our underwriters, so we can actually get things done that many other agents and agencies cannot.
absolutely. And how fast can you underwrite a new construction property?
So start to finish, and I'll kind of step back on that real quick. You guys did a great job of in the beginning when you and I first met. You guys said, "Hey, here's the models that we're gonna build." You showed me the single family, the duplex, and I think was maybe a triplex
We were
over
doing
there.
triplexes in the beginning with you. Now we only do quads.
Yeah, and quads. So what's good is now I know the model. So if somebody were to tell me they've got a duplex in this particular area, I already know where to go and what to do. And
Hmm.
I think we can get start to finish in about 12 to 15 minutes. Obviously, that doesn't usually happen start to finish because we're going to get introduced to the investor. They're going to say, "Hey, I'm doing all of my due diligence on this property. Can I have your insurance number?" And maybe a couple weeks later, we circle back around and they go, "Hey, everything looks good. I'm buying the property. Let's go ahead and bind that insurance policy." And once we have the quote out to the investor and they say, "Go ahead and bind," and I think 4 or 5 minutes, and they've got it in their email.
Yeah. Yeah. So much quicker than I even thought it was. When you said about 15 minutes, I kind of said, wow, things have gotten even better because I don't handle any of that anymore, as you know, not even for my own properties. So
New
that was really,
construction.
Yeah, again, new construction, absolutely. And Chris, with that said, before I open up for questions, how 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 do we do a comp? Like people are so they just imagine a number and we come to it and they go, "Oh, I thought it would have been X amount." So let's say we can take a recent property from Palm Coast or Ocala, let's say. Um, Duplex in Palm Coast, average again, nothing holding you to it, or a single family in Ocala, how much would insurance be a year? About on average, no one's holding you to this of recent for each of those properties.
Sure. Um, so let's say a single family home in Palm Coast. Um, you guys are building them at 1239 square feet or 1617 square feet. And
Hmm.
we're going to have a coverage on it of anywhere from 250,000 to 300,000 because that's what we calculate as the replacement cost. I'm not sure what it
Yep.
costs you guys to build it, but that's what
Yep.
we calculate as the replacement cost. And in those scenarios, we're under $1,000. If we decide to add flood insurance to it, we could be the 1,000 to 1,150, maybe $1,200. It's extremely affordable
Yes. So under $1,000 to insure it for the year.
for the year.
Yeah.
You know what, Jim? I think I finished one for one of your investors. I won't name names, but they elected to not have insurance. It was just a couple hours ago, and it was a 1239 square foot single family.
Okay.
Insured for 250,000, 500,000 liability for the investor, and we ended up at 658 for the year.
658. So I'm hoping everyone's hearing this because these are the things where people go, gosh, I thought it was going to be 5,000 for the year. And you even know we had one doctor friend in Cape Coral who had a national insurance group that quoted him $6,500. Do you remember this, Chris? I mean, I show it in my talk, $6,500. Peter, still a good friend, owns a bunch in Cape Coral with us. $6,500 they quoted. You got it done for 1,600. 1,600. And
That
so,
that's the advantage of Florida.
yeah, so that was quite interesting. So before we open it up to questions, um, I just want to see, is there anything big picture, Chris, you want to talk about, or what you're seeing, what it might look like for the next year with insurance for Florida? What do you like? What don't you? Just a little bit of your big picture.
Certainly, and I watch this closely, not only for the industry, but also for myself. I've got a couple rental properties and my primary residence. So I am watching. I'm one of those people that ended up buying a primary home in the last 12 months, and I don't love my interest rate. But I was actually at a conference earlier this week, and I heard something interesting from the consultants' projections for next year, and
Okay.
based on all the labor statistical data, and they kind of anticipate 2025 to start to ramp up. They've got a magic interest rate number in mind, which they believe actually gets people moving. You guys do a great job with the interest rates for your programs, which is nice. But it was nice to hear that they see Florida as starting. I would call us flat, and I'm not sure what you guys see, but I think in a very general sense, based on what I've seen, because I work with mostly real estate transactions with mortgage brokers, realtors, groups such as yours. It's been flat for a
Yeah,
while. So it's nice to hear that people are optimistic going into 2025. I think we're anticipating a couple of more rate cuts. Fingers crossed. I'm not. Hopefully, they didn't do those rate cuts just for the election. That we actually get a couple of more, and I
yeah,
think we will all be sitting nice. And I think everyone's cash flow ends up getting better the more that our insurance rates come down, the mortgage rates come down. I think it puts everybody in a much better spot.
I agree. I agree totally. So we're on the same page with that. Well, let's open it up to a couple of questions. Chris, I know that one was sent over me before. Michael McGrath asked about, so hurricanes and storm damage were or were not factors in the Florida insurance mess? Because I know we talked about the fraud, but I think he's saying with all the Florida insurance mess, did hurricanes play a part in that as well, though?
It doesn't play, so in a very general sense, it doesn't play as much of a part as you would think. That's the stigma of Florida is, hey, you get a bunch of hurricanes. That isn't it essentially didn't cause the majority of our problems. We anticipate 2 or 3 hurricanes a year. That's what everybody models for. It's what all the insurance companies buy reinsurance for. And as we, discussed a few minutes ago, since the insurance companies have reinsurance, when a hurricane comes, they're essentially only on the hook for their deductible. So that really doesn't cause much problems. Whenever you've got a pipe leak or contractors going door to door for a roof replacement, that comes and there's not a catastrophe or a storm in the water, it's not considered a hurricane claim. Now it comes out of the insurance company's pocket. And the litigation costs come right out of their pocket. They don't have insurance for any of that stuff. That comes right out of the general account. That's what caused most of the strong majority of the problems.
Isn't that interesting? I mean, in all the work that we did together, I would have thought the same as Michael, that it was more the hurricane, but it was the fraud and legal fees of the fraud.
Yeah, it's interesting, and I had that conversation a lot. And says, "Oh, the hurricanes cause many of these issues." And I'm like, actually, it's the reverse. The hurricanes don't cause us much issue. It's obviously a lot to deal with because people get hurt and people lose their stuff and there's claims in it. It can be extremely tedious, but it doesn't cause. It's no additional stress on the insurance company.
Gotcha. Gotcha. Another question that we have from Karen is, oh, just saw some more, but any investing tricks to insurance to get ROI, i.e. are quads better than single family referring to new construction? What are estimates approximately for an example of a quad? Also, do we need to get a wind mitigation 4-point inspections?
That is a great question, and this is this is another benefit to new construction. When you're buying new construction, you don't have to get a 4-point or a wind mit. If you had an older property and you added on a new roof, getting a wind mitigation inspection could give you additional discounts. But on new construction, it's already getting the max discounts that it's most likely going to get, and a wind mitigation wouldn't have that as much of an impact on a new property than it would an older one.
Okay, good. And then Michael Johnson, heard about the difference of flood coverage for flooding due to rain coming down versus flooding due to increased water level storm surge. Is there two different options for flood coverage? So for flooding due to rain versus flooding due to storm surge?
Great question. And there's a very good distinction there. So let's use an example of there's a hurricane right over our house and the roof gets ripped off. And let's say it's raining inside the house and water's building up. That would be your property insurance policy because the rain is not. So let's consider flood insurance. Let's use the term rising water. So if we've got water overflowing from a nearby lake, river, stream, ocean, creek, and the area is flooding from below, so the water level's rising in the area, that is why we have flood insurance. If there's a hurricane raining down water and your roof is completely open, it's raining water inside of your home, that's still your homeowner's insurance or your property insurance policy. If you have the other distinction there is, let's say a pipe bursts inside the wall, it's screaming water and it's flooding your house, but it's from the pipe. That's still your property insurance policy and not flood insurance. The only thing flood insurance specifically covers is rising water. And it's a very good question. It's a very good distinction.
Okay. Yeah. Thanks, Michael. Raymond asked, I have a duplex property in Palm Coast with homeowners insurance that you placed in Town Hill at 1,600. How much will flood insurance cost, or can we bundle that into one of your policies?
The best I can say there is I'll be at my office at 5 o'clock in the morning. I can post my email, or if Jaden, you wouldn't mind sending out my email. If you want to shoot it to my email, I'll get you that number very quickly.
Yeah. So again, but a good number here, Raymond. Thanks for chiming in. Raymond has a duplex, so I'm not sure if that's a 2-bedroom, 2-bath, or a 3-bedroom, 2-bath. We make both models down there, but he's paying about $800 insurance per year per side, which comes out to about $67 a month for property insurance. It's a 3-2. Okay, so thank you, Raymond. So the 3-2 is the bigger model, obviously. So Chris, your company's taking a bigger risk. So I'd imagine the 2-2 would probably be maybe $20 less a month or so, or maybe $15 less a month.
It's more about the total square footage because that's how we derive the replacement cost, regardless of how many rooms. If the square footage is the same, we should be pretty similar. But is that a brand new construction? Or could it be, is
Brand
it
new, well, but
2021, 22?
the three bedroom, two bath is going to be bigger than the two bedroom, two bath, obviously. So we're going to save on square footage there. I was just trying to guess, but either way, you look at it since we're going off the bigger one. So it's a 2022 model. That's good to see, Raymond, again, to get that back to where it was. It's about $67 a month. Just because, again, so many people call us and go, what can I expect? And this, Raymond, thanks for sharing that to show that's pretty doable. And we'll get a follow-up on this on the flood bundle as well.
And
So
that's 67 a month per side.
that's per side. Yep.
Okay. I
Yep.
mean, we might be able to get that down a little bit if you want to shoot me an email. That might be able to shave a little bit there for you.
The way I see it, duplexes I see as two small houses. And I always know if I'm getting in for less than $100 a month on insurance, I'm doing something really right, especially from the stories that I've heard.
Absolutely.
So, well, good.
Especially from the national carriers, such as that one.
National carriers, yeah. Again, some of you have seen my podcast on that, where we literally saved on several Cape Coral properties. An investor friend of mine, $5,000 per property per year, getting over to Chris instead of this national. So, good. Well, a couple more questions. Paul asked, do insurance companies go by FEMA zones or by flood factor rating?
So whenever we go to a flood insurance company and we input an address, um, we we as the agents or the agency never make that determination. The database is built into the insurance company, or they subscribe to a database. So we basically hit community zone lookup and flood zone lookup, and all of that data kind of comes right on my screen. I am not 100% certain on how many, and they could use both, how many databases they use, but the private company can have their own modeling versus an NFIP, which is the National Flood Insurance Program, and that's FEMA. They are obviously using the FEMA maps.
Okay. Good. Well, thank you for answering that. And then Paresh had a question. Do you recommend investors get general liability coverage in addition? And if so, what amount?
And we do have this conversation a lot because I know outside of Florida, when your investor may go get a property, let's say in Kansas, many other states offer the investors $1 million liability on the policy. Obviously, Florida is so litigious. We have many companies where the max is 300,000. I try to get our investors with a company such as American Integrity, which we use a lot. Because they'll give us 500,000. I have been, with their executives, and I'm pressing them to just offer us $1 million, up to $1 million in liability. But I'll say, so I've been doing this for about 21 years. I have not, and I'm not saying that it can't happen, but I have not had a situation with an investor, um, or any other landlord where a 300,000 or a $500,000 liability limit was exhausted. So many of my investors just elect to keep the 500,000. I've got about 10% who say, "Hey, I'm not comfortable with that. Can you go find me another million?" Which essentially they would be getting 1.5. 3 years ago, another million might have been 150 a year. Now, another million is 700 a year. So it really eats into the cash flow.
Yeah. Yeah. Something to watch for. I know it's something in certain stages of my career in investing, I had them, and other times I didn't. I think first, and again, this is just my opinion as an investor, that initial policy that we're doing, that's the most important thing. Now, if you're starting to go into other larger portfolios, as you work with me on different things, it's a personal decision, but I don't think it's always needed. And that's just my personal opinion as an investor, not as an insurance expert, though. Just want to put that out. So,
Certainly.
guys, I appreciate all the questions tonight. The one thing I can tell you about Chris is he's had hundreds and hundreds of conversations, not only with me and close investor friends and family of mine, but also many of our, Southern Impression Homes community, because he gets their stuff done. He gets it insured. He's there for them. You can hear the pricing. He is the expert in new construction, which we love because that's all we do. And so don't be afraid to ask more questions to our counselors, to Chris. That's what we're there for. If you are interested in setting up more time, you can just email Caitlin.shear at SI Homes FL. You'll be able to get in contact with us. Also, just send an email to this number as well if you're wanting to get a copy of the book. Again, this is a really good read. Of course, that's me as the barber telling you get a haircut since it's my book, but we really put a labor of love into this that includes a lot of our successful investors and our principles that it took us blood, sweat, and tears and mistakes to develop over the last 25 years. So this will give you an idea, no matter where you go, of some things you want to watch out for, and also some things that might actually speed up your investing journey with a lot less headaches than my wife and I go through, and some of our other founders as well. So, Chris, any parting words for the team?
Um, no, I just wanted to make sure that I answered everybody's questions. And the one thing that I did just want to mention, the the national carrier NREIG, which is what our doctor friend ended up having, every time we've seen them, they've been astronomical. One of the reasons for this is they're using a Lloyd's product because they're not whoever that agent is for the national company, they're
Mhm.
not admitted in Florida, so they have to get this roundabout product to work for investors. And
Yeah.
the scenario that you had mentioned earlier from 6,500 down to 1,600, it's pretty common with this carrier. So I would just tell all the investors, if you have that policy from NREIG, it might be worth it to take a look at, especially if you have a new construction property.
Yeah.
You shouldn't be paying any more than $2,000 a year. So if you are, you could stand to bring your cash flow up by a lot.
Okay. Love that, Chris. Thank you for the info on that. Chris, thanks for taking time away from your family tonight to be with us. Again, thank you everyone for joining us tonight. We'll get you a free recording of this. Again, if you're interested in the book, drop Jaden a chat, say you want a copy of the book, or just go to caitlin.shear at sihomesfl.com. We'll send you a free copy of the book, or set a no obligation discovery call. You want to go through some of the performance, go over some of the properties. Some of the properties, as you know, are pre-leased, and we didn't even talk about our financing tonight, but yes, we are still offering our in-house financing at 3.75%, and that's long-term financing. So again, we're here for you. Thanks for joining us before the holidays started. And Chris, thanks for being a part of our team. We really appreciate everything you do for us in that way.
Hey, I appreciate you guys having me. Everyone have a wonderful evening. I look forward to talking with some of you.
Yes. Thanks again, everybody. Have a great night. Take care.